So let's talk about Peloton for a little bit. Will a phoenix come out of this smoldering heap of ash? This company fell from grace in a stunning fashion. So let's dive into what's happening over there. Peloton had a business model that worked relatively well for the pandemic, but they overshot their hand thinking that the demand would continue. Their business model practically depended on gyms to be closed and did next to nothing to pivot when the gyms opened back up. They overproduced their inventory in the second half of 2021 and only stopped production in July of 2022 to move to their unsold inventory. They also could not get bikes out quickly enough and sometimes spent as much as $500 to get their bikes to customers without even taking into consideration importation fees. Peloton also made an expensive $420 million acquisition of Precor, who is a global manufacturer of exercise equipment, and they did this in order to have manufacturing capabilities on the US mainland, in an attempt to skirt the supply chain issues. Peloton is now trying to sell Precor, returning any future manufacturing it may or may not do back overseas. About a year ago, CEO John Foley was replaced by former Spotify and Netflix executive Barry McCarthy, and the company has been pivoting to save itself from the mismanagement of the previous executives. They've been trying to become more of a software as a service business, taking a strong shift away from hardware production. In fact, they have not even produced a new bike since July of last year, as they work through the $1 billion plus in inventory that has built up since the demand significantly fell off, as customers went back to their gyms. This is the main issue with the company. The product that they produce is an economic substitute for one piece of a gym membership, a cycling class. The benefit is obviously you don't have to go to the gym anymore. You can just use it at your house. However, most people would much rather pay the $50 to $100 a month for a gym membership and use the cycling bikes that they have there instead of buying an extremely expensive Peloton bike that they can only use at their house. The market is therefore limited to people who would not go to a gym, but enjoy spin classes and have $3,500 to spend on a single piece of equipment. To my surprise, millions of these people do exist and use the Peloton products. In fact, there's about 7 million active users and 2.7 million subscribers. The rate of increase in these metrics is much less than it was during the pandemic, but the active user base is in fact growing. However, gross margins have gone down about 50% since the height of the pandemic, with the company currently making about 20% gross margin instead of 40% seen during 2021. In its best year, the company lost $190 million. But in 2022, they managed to lose $2.8 billion. Even with the new management cutting employees by 50%, abandoning major projects like the manufacturing facility that they plan to build out in Ohio, listing the manufacturing equipment that they Precor acquisition for sale, and slashing their marketing budget, the company will still lose a ton of money. Very few companies exemplify the meme stock of the pandemic more than Peloton. It seems that the product that Peloton created was a great idea and that the business plan was sloppily executed and risk was not properly accounted for by the executives. The exuberance was exacerbated by the momentous rise in the stock price during the pandemic. Many of you may know that I am long on innovation companies, and I think Peloton is relatively innovative. Most innovation companies have seen massive compression in their multiples due to increased interest rates, and therefore a subsequent drop in the price. This is the case with Peloton as well, but Peloton has something else going against it. The company wasn't just suddenly shocked by high interest rates. It has serious structural problems related to its ability to assess market demand and risk factors. Could Peloton turn it around? Sure, it could. However, if I'm going to bet on innovation companies, Peloton is far from a good investment. I give this company an avoid rating. They have done many good things to try and turn themselves around, but I believe there are better price stocks to fill the role of innovation in most portfolios. What do you guys think? Comment below.